Absolutely. India shining all the way. Devang Mehta from Spark Private Wealth Management is with us on the show. Devang, in our last conversation, you were bullish on the entire Capex theme and even credit financing to manufacturing, to infrastructure, power, utilities. Now, the thing is that stock markets have also moved. They're always one step ahead of what's going to take place on the ground, the real economy. How do you play the markets from here on? What about these Capex themes? Have they run up too much, and where is it that you see value right now?
Thanks for having me on the show, Reema. Yes, it's great to be on CNBC on a day of all-time high. And yes, honestly, to tell you the truth, this is a confluence of sentiment, what sentiment can do, what liquidity, particularly domestic liquidity, the SIPs, as well as fundamental macros and micros, right? So earlier it was a missing macros and only micros. Sometimes it's only micros and not so good macros. But probably if you just look at the GDP print, which you are talking about, right? It's honestly manufacturing, utilities, power, coal, mining, I think everything, even construction at 12.2%, manufacturing at 13%. The services side has not done so well. The consumption side at 3% is also not done so well. But brilliantly, I think the Capex has been captured. Government has done a lot of efforts in the last 2-3 years to boost public expenditure, public Capex. I think that has played a big role. Even the industries, even a lot of your private Capex has started to come into the picture with capacity utilizations dwindling by the day. Honestly, there are a lot of themes which we have played very well. There's engineering, there's capital goods, there is Capex-oriented other sectors, there is building materials in a way, wires and cables. These are companies which have done very well. Today, if you ask me whether you should take off some money off the table, the answer is clearly no, because what we are seeing is we are getting into a 3, 4, 5-year type of a structural bull run where your Capex stocks underperformed. Actually, last 5-7 years, if you just take out the last couple of years, most of these businesses have underperformed. Most of these industries have also underperformed, be it PSU-related defense, be it PSU-related coal mining. I think most of these companies are underperformed. But for the next 3-5 years, I think it's getting into a scenario where the confluence of private and public Capex will lead these companies higher. There are numbers to be shown. Numbers are coming, robust numbers, revenue growth, PAT growth, realizations improving, order book, most of these companies, execution has picked up. So my sense is this theme, if somebody stays for the next 2-3 years, if you ask me 3 months, the answer is difficult. But yes, 2-3 years, if somebody wants to stay in, this is a good sector to be in.
Devang, hi. So, let's get a little more granular here. Within this large sort of complex of industrials or Capex-oriented plays, give us some examples, specifically the kind of themes and stocks that you like, because the thing is the entire basket has moved up. Whether you're looking at some of the capital good majors or you're looking at a stock like L&T, which is up 50% this year. And then, of course, there's defense and railways. Those stocks are up 100, 200, 300%, depending on which one you're picking out. So just help us out with some more nuances on what to buy.
So I think, Surabhi, what we have seen is exactly what you mentioned, that almost a plethora of businesses or industries have sort of done well when the Capex has sort of started. I think across the market cap spectrum, be it large cap, be it mega cap, mid, small, micro, there are a lot of businesses available. So to just cite certain examples, of course, the normal sense that people get is that L&T is going to be a proxy play, and it is a proxy play to play the infrastructure and capital goods story. But there are companies as good as Siemens or an ABB, or even something in the different universe like a Timken India, which is into bearings or motion management. There are companies as small as Petty Engineering, which is again a relative small cap, not recommending or mentioning, but yes, we hold this type of businesses across the market cap spectrum for our clients, where even wires and cables, there's a company like Polycab, which we have been buying since ages. And this is this company which has done so well, looking at the industrial demand, looking at the real estate demand. There are a lot of construction allied companies which again look extremely good. ER&D is a segment, again engineering research and development, which is not exactly a Capex related, but yes, a lot of companies expanding and improving their productivity would also need this type of companies. So yeah, a lot of examples. I think I cited a lot of examples.
Devang, you spoke about ER&D, and in your portfolio, you have names like LTTS and Tata Elxsi. So wanted to understand why you picked those two over, say, peers like a Cyient, where valuations are far more reasonable, or even a KPIT Technology, which has been the only IT or ER&D company where we've seen a guidance upgrade as the year has gone by. Most of the other technology companies have lowered their revenue forecasts in this year in 2024, barring a KPIT Tech. So why is it that you've given that a pass?
I think yes. KPIT purely on valuation. Of course, we like the business. It's not that we don't like the business and we hold it for certain clients. But yes, given the good guidance, the stock has also sort of reacted and done well. If I'm not wrong, it trades around 60-65 times. Whereas a business like LTTS, L&T Technology Services, had its phase, right? It went from 2018. It was a 1,000 rupees stock, and it went to around 5,500, 5,900 just during the COVID times. And yes, from there on, it has suffered. The company didn't come up with good set of numbers. The guidance marginally decreased. From here on, if you talk about artificial intelligence or robotics of engineering, research and development, even the Tata Tech listing, which again sort of will infuse a lot of re-rating for these businesses. Tata Tech also left a lot of juice on the table for the investors to make on the listing day. But most of these companies, I think, are in an era where even your auto and auto ancillaries will do well. Your auto OEM manufacturers are having a dream time. A lot of these companies also cater to aviation and other industries which are also flourishing in India. So plus even the exports, these companies are extremely strong at. So my sense is that if you want to be in this sector, you can probably have a basket of these 2-3 businesses which probably will have a timely sort of returns. A company will do well for 6 months, probably go into hibernation for the next 6 months, and then another company would do well for the next 6 months. So that's where I think a basket of these 2-3 businesses should be the order of the day.
All right, got that. Devang, thank you very much for joining in and helping us make sense of the markets as we look at fresh all-time highs today. Need to take a break on that note. We'll come back on the other side and discuss everything that's hot and buzzing in the commodity space. Manisha will join in.